So what do you get when, the dollar spikes, silver marches towards record highs, and, the Nasdaq quietly pretends like, nothing is wrong? Either it's Monday or the markets had a really early start to the week without telling the rest of us. So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning, I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief, where each morning I unpack the biggest movers across currencies, commodities, indices, blending fundamentals, technicals, and just the right amount of common sense. Because let's face it, markets don't always make sense. Let's kick things off today with currencies. The US dollar index nudged higher to 99.45, recovering a portion of last week's drop as traders brace for a backlog of US economic data delayed by the recent government shutdown. A key driver this week, that will be Thursday's September jobs report. So yes, you heard right. The jobs report, the NFP report that we didn't get in October, is being released on Thursday, along with flash PMIs, existing home sales, and the NAHB housing index. And just to top everything off with a little cherry on top, the weekly ADP adjusted release. Rate cut expectations have cooled dramatically. Markets are now assigning only a 46% chance of a 25 basis point cut in December, down from nearly 90% a month ago. Fed officials have also voiced skepticism about easing anytime soon. On the Swiss side, so looking at the franc, it remains strong after Switzerland secured a 15% tariff deal with the US, ending months of trade tensions. Add expectations of slightly higher inflation and steady Swiss National Bank policy, and you get a franc that has a bit of a safe haven glow that is staying intact. All in, USD CHF got a modest lift as the dollar steadied from last week's dip, rising to 0.7954. On the technical end, the currency pair has snapped a 7-day losing streak and lifted slightly from its mid-October lows. Price action shows stability in the 0.793 to 0.796 range, with markets observing whether the currency pair can sustain a rebound or whether the franc's strength caps further upside. Key zones to watch: while near-term resistance is sitting at 0.796, a break could lead to a retest of 0.81, where sentiment has been, a bit of a tug of a war at this point in stage. So if the dollar momentum continues into the week of, delayed data releases, this zone could become especially important. Moving over to commodities, silver climbed to around $51, continuing its march towards the all-time high near $54.50 at last month. That's after gaining more than 10% last week, even as the US government reopened and the economic data backlog jam begins to clear a little bit. Key drivers here, number one is investors seeking hedges amid global uncertainty. Number two, India's wedding season boosting physical demand. Number three, tariff concerns adding supply anxiety. Four, the US adding silver to its critical minerals list, opening the door to Section 232 investigations. And number five, a potential softer US labor print on Thursday, which, could put pressure on the dollar and support metals. But hawkish Federal Reserve remarks still act as a short-term ceiling. Looking at the charts, silver is holding near $51, firmly supported by bullish sentiment after last month's record highs. Technically, the current structure remains elevated within the $50 to $54 band, where a break above $51.50 could see buyers re-enter, while deeper pullbacks may stall ahead if we should drop below that $49 region. The market is clearly treating dips as opportunities at this point in stage, at least until Thursday's US NFP gives metal traders some concrete data to work with. Finishing things off for today with equities, the Nasdaq 100 is trading at around 25,200, slightly higher on the session. But the bigger story here is the atmosphere. A strange mix of anticipation, caution, and, well, a bit of nervous laughter from traders clutching Nvidia charts. This week brings the delayed September NFP report, Fed minutes, and a full slate of US earnings, especially Nvidia on Wednesday, along with Walmart, Target, and Home Depot, and a few others. Markets have sharply reduced expectations of a December rate cut, as stated a little bit earlier, now sitting at around 46% versus that 19% from last month. And with many believing that the Fed may have to go into its December meeting flying blind due to missing October data, sentiment has become a little fragile. And ongoing worries about AI-driven valuations, big investor exits like Peter Thiel, and the recent Nasdaq pullback and tech index is, well, navigating a complicated backdrop. Technically, looking at the charts, US 100 remains elevated year on year, up 22.6%, though November has been a bit choppier. Price action is currently consolidating around 25,200, with overhead pressure tied to stretched tech valuations and anticipation of those Nvidia numbers. Forecasts from macro models point to a 24,700 retracement level by the end of the quarter. So traders continue to watch for signs of, well, deceleration as earnings unfold. Looking at tomorrow, we'll likely have fresh clues from early week Fed speakers, and with markets jittery, even a subtle comment could shake things up. But the real question is, will silver continue its march towards new highs, or will the dollar steal the spotlight once the delayed data starts dropping? Well, we'll find out soon enough. And that wraps up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Simply head over to ATFX Africa by clicking the link in the description, and we'll go and experience the difference for yourself. It is until next time, stay sharp, stay focused, and trade smart.